these are these 17 and a half year fear greed cycles. And I think we're right on schedule. I don't see anything saying we're not. Here you are, you millennials, rock and or roll. And these are the two paths for us. This is the yellow is the baby boomers. And, just so you have a context, this is a study done over a century. So you can't even argue, well, Brian, you don't really have much data to work with. I mean, I got over 100 years of data. You tell me, is 100 years of evidence, is that enough to convince you? Maybe it is, maybe it isn't, I don't know. All right, so there is the past century. I mean, it's ridiculous how accurate this is. So this was the post-Civil War baby boom. And of course, I think that actually this is this cycle right here. This is obviously the Great Depression, and really 2008. If it wasn't for this quantitative easing nonsense, this is what we should have gone through, was the unwinding of the post-Civil War baby boom generation's greed cycle, their fear cycle. This, right in here is Bretton Woods, or the Great Reset, for their particular cycle. And of course, there is the next cycle's generation's greed cycle. This is like the people that fought in the Second World War. I would argue that Bretton Woods, the Great Reset of their generation, that's what actually caused this price increase. So I think, for our respective cycle, I think we're somewhere in here now, and you can see we're just sort of bumping along. Here is our teal. So there's their teal. This is our teal. And you can kind of see, I think we're sort of like right around in here, which means that this is what our next 10 to 15 years looks like. It's just going to be a pattern. It's not going to be the absolute insane, what they call these the roaring 20s. And then, of course, whereas there's the early 1980s with the great early 80s boom, and then, of course, the 80s stock market crash. There is the millennials, or I beg your pardon, there is the millennium, but this is the baby boomers greed cycle peak, and that corresponds almost exactly with the roaring 20s sort of price appreciation. I don't think you're going to actually see that kind of economy. This next growth cycle is going to be sort of like we muddle along. Fits and starts, fits and starts, fits and starts, fits and starts. So with that said, like I said, I think we're actually right about sort of like here in our fear greed analysis. So if we zoom in on this current cycle's 17 and a half years, well, you can see, the gray line is the what they call the greatest generation. That's what I think our economy is going to look like here. This was the greed cycle coming out of the Second World War, this gray line here. And I think on balance, you can see muddle, muddle, muddle. There's the Great Sickness. You can see, if we just hide this. There we go. You can see muddle, 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 muddle. And notice actually both of them. This was the baby boomers greed cycle. They even had a pretty precipitous pullback at the beginning of their cycle, then rallied back up, and then you can see both of them just kept charging ahead here. So if we look at current price action, muddle, 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 huge dump, and you can actually see the dump in this case actually came, looks like about a year earlier. I guess about 6 months, not a year, 6 months. Maybe that had to do with Mr. Orange Toupee and all of his finessings of the market. I don't know. We recovered, just as both previous cycles recovered. There's the yellow and there's the gray. So we recovered, moved to new highs, went surging up to new highs, and then had to consolidate. Now, in 87 scenario, we consolidated and then had another burst higher for a couple years. I don't see that happening, especially with the way Biden is going, the whole inflation issue. Keep in mind, through this market cycle, remember, interest rates had topped and interest rates were actually falling. And so that's one of the reasons why equities dramatically outperformed, was they had to, not only were companies, doing more business and more sales and more economic activity, but they also had a situation where the comparisons in interest rates were getting more favorable and easier. If we overlay our roadmaps, would you say that we're kind of on course here? I think so. And I actually don't think that this is really abnormal. It's interesting. Again, I don't think we're in the baby boomer cycle, because interest rates are not going down, they're going up. So if anything, I'd almost say, you know what, this probably is a non-event. We can even really fade it out. I think that this is our path. And I got to say, regardless of what the reasons are, and frankly speaking, I'm not even quite sure what this reason for this correction was here, but that sure looks like it's following that path, doesn't it? See how it sort of bumped up a bit higher here right out of the gate. Then we had to correct. In this particular case, we went a bit higher, but then boom, we had to come down, basically follow that path. Then following that, massive bidding up of the market. And then do you see, and this is what I'm worried about, and it makes sense, because we're going to have that congressional election in November. And I wouldn't be surprised if this period here is that, 22, 23 Benner cycle. But does it make sense that if you took 22 and 23 and built your portfolio out of what you want to be invested in, growth names, like the exoskeleton name I showed you David had, and, in a minute, I suppose we'll get to that for last night's ideas. Does it not make sense that that's what I want you to set yourself up for? You see that? Does that make sense? Yeah, exactly. That's, and this is what I don't think a lot of people understand. Now, you guys are all crypto enthusiasts. How does that 4-year cycle go in crypto? And wouldn't this align nicely with the next 4-year crypto cycle? I think so.